Hey, Eric here from 5minuteinvesting.com, and today we're going to talk about news. And mainly, there are two kinds of news: good news and bad news. Now, I know it used to be really popular and people invest based on news all the time, but after a few years and how people are blaming it doesn't work and so on, um, people move on to other analysis like fundamental analysis, technical analysis, instead of relying on news. In fact, chances are, if you're looking at news, you would be at a disadvantage because the management in the company will always know before you. For example, let's say you're looking to buy based on new product launches like the iPhone X or the iPhone 12. People in Apple are going to know before you. And let's say you're trying to buy before Amazon releases a new product. People in Amazon are going to know before you. So the question is, do you really have an advantage? And the answer is probably not if you trade solely based on news. So how do you use news to your advantage? So before I go into the details, I just want to say most people invest when the good news comes out, which is not the best approach. Now, when the good news comes out, you're going to be very excited. This is where the hype happens. Your friend coming to you and saying, wow, look at this company. It's going up. It just released a new phone or accessory or a gadget. And, if you want to buy, you got to buy now or else you're going to miss out. Chances are, by the time you hear about this good news, 90% or more of the people who will invest in this company has already invested. So the price will be at a high. And this is exactly how the general public enter into a high, because they think good news is exciting, they want to join in the hype and make a quick buck, and they enter at a high because 90% of the people are already in the market. Instead, what happens when you hear bad news? When you hear bad news, people are scared. They want to sell. Price is probably at a low at this point because they already know the company is not doing well, the people within the company is already shorting the stock or exited already. So then the price will be at a low. Do you see what I'm getting at here yet? Before I even go further, you can already devise a strategy based on this psychology of good news and bad news, regardless of which company it is. Well, you want to buy when there's bad news and sell when there's good news. Now, one of the question might be, okay, what about rumors? Now, rumors, I usually categorize it under good news, but I don't usually sell under the rumor because it's not confirmed. So, for example, let's say the rumor is this company is going to have higher earnings. It's what the rumor is. I'll wait till the release or before the release, knowing that is a higher earnings, then I'll sell it. But before you start going and start trading news like this, there's one more thing you need to know. And this will save you a lot of money. Now I'm kind of OCD, so I'm trying to clean it up as much as possible. So even if you're looking at news, you want to look at the type of company that it is. And there's mainly two types. A good company and a bad company. So when you have a good company and good news, of course, the price will be at a high. And when you have a bad company with good news, price will be at a high as well. over the long run, the bad company will always go down because it is a bad company. No matter how much good news this company has, it will go down. And when you have bad news for a good company, price will be at a low. And when you have bad news for a bad company, price will be even lower. Now, at this point, I want you to think, okay, so which one should you buy? Which box should you buy in? Which one should you avoid? And which one should you sell? And it should be pretty obvious that if you have a good company with some bad news, that is super important. The key word here, temporary, then you should buy. Why? Because A, the bad news is confirmed. And B, you know that people who will panic about the bad news, by the time you hear it, has already sold. C, the price is at a low. And D, you know that this is a good company, so when the bad news get resolved, price will go back up because investors' confidence will be restored. So this needs to be a temporary problem because let's say the company's strategy is failing, and that's something very fundamental about the company. No matter what they do, unless they change their strategy, which is really hard to do, price will continue to drop. And this is how you tell between if a dip is really a dip or it's going to be a change in trend. A change in trend is when the company's fundamental is failing, like the strategy, and a dip is only a short-term problem that can be resolved. So at this point, you buy. Now, I don't short stocks because I think shorting stock is really risky and there's a natural tendency for the market to go up. So if you have a bad news for a bad company, I avoid this company like a plague because this is going to be such a significant drop that it's really hard to time what the bottom is. The previous high and lows cannot be relied because it is a bad company and it is bad news, and chances are it will drop it significantly. Now, I know some investors like to invest in distressed company, basically companies that are near bankruptcy, but I usually avoid. So on this side, when you see some good news for a bad company, the price is high, but I would just ignore it because I can't tell if the trend is actually up or it's just a temporary top and it will continue on a downtrend. In fact, if you never invested in a bad company and you avoided this bracket, then you don't need to worry about whether there's good news or bad news for a bad company. Finally, when the price is high and this is a good company. Now this one's a bit tricky because it links to our exit strategy, and exit strategy can be very convoluted, vague, and not clear. So at this point you have two options. Either you hold or you sell. Now, this depends what you think and how you understand the company. For example, if you believe the company will continue to make way more profits in the next 2 years than what other people expect, then you should hold until 2 years later. But if you think you're trading for a new product release and the product is released, let's say the iPhone 10, then you think, okay, the next iPhone is going to be shipped. Then you sell it because you don't expect the company to have more good news in the future. So, and this is how you trade news. When you want to enter the market, you want bad news for a good company. And when you sell, you want to wait for good news or some sort of high to sell. And if you match this and build it with other indicators I teach, then your probability of success will be really high. And this is how I invest, and I keep it super simple because it doesn't take a lot of time and it's easy to understand. So give me a like or a subscribe. That's all I'm really going for here. And And if you have any questions about news, you can always leave a comment below, and I'll try to answer it as soon as possible. Thank you.